Debt happens. It's part of life. Most of us have some form of long-term debt, whether it's a student loan, a mortgage, or an auto loan. Credit card debt is different. If you charge more than you can afford, that mountain of debt keeps getting bigger and bigger. I'm Herb Weisbaum, the Consumer Man, a contributing editor at checkbook.org.
Welcome to Consumerpedia at checkbook.org. We're the nonprofit that helps consumers select services, avoid trouble, and save money. Because we don't accept any advertising or take money from any business we recommend, you can rely on checkbook.org to be completely independent and objective. Now, here's the host of Consumerpedia, America's consumer expert, the Consumer Man, Herb Weisbaum.
When you're drowning in debt, it can feel like there's nothing you can do, but there is. You just need someone to show you the way back. In this episode of Consumerpedia, we'll talk about the various options available and why some of them are best avoided, plus how to prepare for the economic slowdown that could be coming later this year. We have two guests joining us today. Bruce McClary, a senior vice president with the National Foundation for Credit Counseling, a nonprofit dedicated to helping people deal with debt and better manage their finances. Hello there, Bruce.
Hi, Herb.
And Cara, who lives near Boston. 5 years ago, she found herself drowning in debt, got help from a nonprofit credit counseling agency, and today is debt-free. Cara, thank you for being with us. Congratulations.
Thank you so much. I'm glad to be here.
So you were in your late 30s, found yourself burdened with how much debt?
I had just under $60,000 in credit card debt.
Wow. How did that happen? What took place to get you there?
I was living well beyond my means. I was paying my rent on credit cards, and it was trying to emulate a lifestyle that I definitely couldn't support.
How many credit cards did you have before you finally got help?
12.
12 different credit cards?
Yes.
And I assume they were close to being maxed out?
They were pretty much maxed out, yes.
Wow. It must have been pretty scary realizing you were in that situation.
It was. I was able to make the minimum payments, but I was never physically going to be able to pay them off.
So you realized by making the minimum payment, you were just getting deeper and deeper in debt?
Yes.
So tell us the process. What made you decide it was time to get help and pay down this debt and get yourself where you wanted to be?
Well, on your credit card statements, it tells you if you make this payment, it will take you. And mine were saying things like 36 years. And I realized, okay, something has to give. I would call the credit card companies directly and ask them if they would lower my interest rate because I had never missed a payment. I had always been on time with my payments, as small as they may be. I was making the minimum. They wouldn't budge on the interest rates. So when I found out about Money Management International through my bank, their thing was that they would negotiate the interest rate for me. So that was a huge help. Mm-hmm. They had more leverage than I did. And they were successful in negotiating a lower rate on 11 of my 12 cards.
So you worked with a nonprofit credit counseling agency in your area. What was the process? What did you have to do? Did you make a budget and then give up the cards, or how did it work?
Yeah, I met with a counselor, which sounds intimidating, but when I met with them, they were super nice and non-judgmental. They talked about my budget and my spending. Because I was making the minimum payments, my monthly payment didn't really change. But just instead of keeping track of 12 different cards and 12 different due dates, I had one direct debit to the nonprofit, and then they paid all 12 of my cards, even the one that didn't lower the interest rate. So for me, I got a ton of my life back in that I only had to make one payment every month. The counselor that I met with was just really friendly and, like I said, non-judgmental. That was my biggest concern, is that I was going to be embarrassed. I wasn't embarrassed. They talk you through it, and then I made the agreement to not use any credit until everything was paid off. Mm-hmm. I gave up all my credit cards, which I was going to have to anyway because they were all maxed out.
And how long did it take you? Was it 5 years? Is that correct, to get to zero?
Yes. They break it down for you, just like an auto loan or a mortgage, where they tell you this is your first payment, and then you will make X number of payments. And it was a 5-year program. Every month they would withdraw the money from my checking account and then turn around and pay each of my 12 credit cards. And then as I would get the credit card statements in the mail, I would go onto their website and update them on what my new balances were so that they could keep track as my balances went down. And it was really fun to see that graph go all the way to zero.
I bet it was. And I assume that as the balances went down, your credit score went up.
Yes. My credit score went up over 100 points.
Wow. That's like a whole nother category you jumped to.
Yes.
You must be proud of yourself. It took a lot of work to do that. You could have just maybe gone bankrupt.
I could have, but I felt really obligated that I got myself into debt and I wanted to pay it back. I felt like it was money I owed and I wanted to pay it back. I didn't feel that bankruptcy was the right approach for me. And I had called some other companies prior to finding this nonprofit. And their advice for me was, oh, we can't help you because you're making your payments. So stop making your payments for a while and then we can try and help you. And that just wasn't sitting right with me because what I had going for me with my credit score was that I was making on-time payments and I did have 100% payment history. So I didn't want to lose that. Being able to say that I paid it all back plus interest, just not as high of interest as it would have been, is something I'm really proud of.
Final two questions for you. Based on what you went through in working with the credit counselors, do you have a different attitude now about spending and budgeting? And do you work on, if I can pay cash for it, I get it? Or what's your attitude now?
Definitely. Because I'm so used to not having a credit card, I got really good at just using my debit card and the money that was in the bank. And if I didn't have it, I literally didn't have a credit card to buy anything. So I had 5 years of practice and I finished my debt management program back in February of this year. I am using a credit card again because I get cashback rewards and I'm taking advantage of that. But I am paying my balance in full because now I'm comfortable with how much I can put on a card. I do pay that balance in full every month.
That's the right way to use a credit card. Pay it off and then get all the bonuses from it.
Yeah. It took me a while to learn. I'm getting there.
But you did. For someone listening who feels that they're buried in debt and can't possibly get out, what's your message to them based on your personal story?
My only regret in this situation is that I didn't call a year earlier and get this set up. I feel like I paid higher interest rates for at least 1 year more than I needed to. I was really embarrassed, and that's what prevented me from calling and basically admitting that I had a spending problem and a bill problem. My advice is to just call and reach out for help and do it because no one's going to yell at you. No one's going to be judgmental. And if they are, they're probably not the right partner to work with.
Well, Cara, thank you for sharing your story with us. Congratulations. I know it was a lot of hard work and you should feel really good about what you did.
Thank you so much.
So, Bruce, now it's your turn. Bruce McClary is a senior vice president with the National Foundation for Credit Counseling. So I assume Cara is not an isolated situation. This is what you folks deal with all the time and help these people.
Yeah, Cara's circumstances are exactly what NFCC certified counselors are prepared to handle. And even though the amount of debt and some of the other specifics might be unique to her situation, whether you have $1,000 of debt that you can't manage or whether you have 20 or 30 or 60,000, it's still an issue. It's still a serious issue. And if it goes unaddressed for long enough, it can cause bigger problems. So it's very common for our counselors to deal with a variety of different situations involving debt that's unmanageable. And certainly they're experienced in dealing with each.
So the way Cara described it, you go in, you meet with a counselor, a trained counselor who looks at your situation. I assume they help you figure out what your budget is if you don't have one. You got to stop using their credit cards, and then they figure out a plan that'll help you pay off this debt in a certain amount of time?
Yeah, I mean, first and foremost, the counselor is focused on the needs of the client in the moment at hand, and whether it's the accounts that are falling past due, debt collectors calling. So they'll review your entire financial situation and they'll create an action plan based on your priorities. First of all, the most urgent, which is getting back up to date and getting your finances on track, but also moving beyond that and reaching your financial goals and being able to do it while prioritizing savings. So those are some of the focus areas of the initial touch point when you reach out to a counselor and when you're looking for advice. And then what they can do is they can give you a range of options. Some of them may be self-serve. Some of them may be more involved in terms of the debt management plan that Cara was talking about. And then in the end, it gives you the opportunity to make the most informed decision for yourself as to which way you want to proceed.
We always hear, just call the credit card company, and in most cases they'll be willing to lower your interest rate. I'm not so sure that really happens. It didn't happen for Cara, but you guys can work with the creditors to help cut the burden that these people are facing, right?
Right. Since 1951, the NFCC has been around, and our member agencies have long-standing relationships with the major creditors. And part of those relationships involve agreements where the creditors will make certain concessions for people who enroll in a debt management program. So not only is there the opportunity to achieve savings and affordable debt repayment, but there's also that confidence that when you enter into a debt management program, you're not leaving things to chance in terms of negotiations that would otherwise have to take place on the fly if you were to try to call up your creditor and negotiate yourself, or if you were to turn to a third-party debt settlement company that would approach it the same way.
What about the cost for this nonprofit credit counseling? People might be saying, I'm already in debt. How much am I going to have to pay for this service?
Right. Well, you have to think about it in two ways. First of all, the debt management plan reduces your overall cost of debt repayment and shortens the amount of time that you would have to repay your debt. Cara referenced how the credit card statement was showing her that it would take her over 30 years to repay the debt that she had. But then she ended up paying it off in 5 years. So that's substantial when you think about all the interest and fees that she would have otherwise been paying between year 5 and year 30. And so that's part of that savings calculation. And then, of course, monthly payments are reduced as well, which saves you in the moment on your month-to-month budget. So that offsets the fees significantly. So there is typically a fee monthly for a debt management plan. Usually that fee is based on the amount of debt enrolled and some other factors, and it averages somewhere around $30 to $40 depending on the plan and the amount of debt there. But if you compare that to the amount of money saved on the interest reduction and the payment reduction and the reduction of time that you'd be in debt, it certainly is well worth it.
Bruce, some people think that you have to have a really sizable, substantial amount of debt in order to use a credit counseling service, but that's not really right. You can help with almost any situation or somebody who just wants to be smarter with their money, right?
Right. The initial counseling session is intended to be a budget counseling session. It's also credit counseling because it looks at the way you're managing your debt and if all your obligations are up to date or not. But if you're having trouble balancing your budget, if you're looking for ideas to get more out of your budget, as so many people are right now, contacting a credit counseling agency can really help you identify some solutions that you may not be able to think of when you're down in the trenches, sitting there with your budget, your sleeves rolled up, trying to do some number crunching. It's always helpful to get some outside perspective, a financial professional, to point you in a direction you may not have considered. So there is that benefit. But if you are in debt, there is no minimum. There is no minimum threshold. So there's no qualification process that you have to go through, which might be a barrier for somebody with only $1,000 or $2,000 or $5,000 in debt, because that $5,000 might as well be $1 million if you're not able to affordably repay it. So it's worth reaching out and finding a solution.
Now, some companies promise that you can pay a fraction of what you owe and be debt-free without really working at it. We're going to talk about those companies next. This is Consumerpedia, powered by Checkbook.org.
Checkbook.org can save you money on all sorts of services you need and help you find high-quality businesses in your area. From tax preparers and auto mechanics to electricians and plumbers, we have ratings in these 7 metro areas: Boston, Chicago, Philadelphia, Seattle, San Francisco, Minneapolis-St. Paul, and Washington, D.C. To find out more, visit checkbook.org. Our advice is always free. Ratings of local services are available with a subscription. If you live in one of these 7 areas and haven't joined Checkbook yet, check us out. Get a free 30-day subscription by going to checkbook.org/Consumerpedia.
So we've all seen or heard the ads. Drowning in debt? Debt collectors harassing you? No problem. Just give us a call and we're going to help you deal with that right away. It's going to be simple and easy. Bruce, what about these companies? What are they offering? What are they doing? And why should we steer clear of them?
Well, those TV and radio ads that offer guarantees or set expectations that they can make some of your debt magically disappear, they're likely coming from debt settlement companies. And they typically offer to ask your creditors or debt collectors to write off a portion of the debt that you owe, which might relieve you from your obligation to pay the full balance if they were delivering to expectations that are set in their advertisements. You would still be on the hook for some of the debt, even if they're successful. But the goal that they're putting in front of you is that they're going to try to reduce your obligations significantly. Because those settlement requests are considered by creditors and debt collectors on a case-by-case basis, there's really no guarantee of any success, which is a stark contrast to the way that nonprofit debt management plans are supported by the creditors through prearranged terms that allow for affordable repayment. But back to the debt settlement companies, as you might expect, the success rates are kind of a mixed bag because it's that sort of on-the-fly negotiation. And worse, they're giving out some bad advice in some cases because they're telling people, just as Cara mentioned, to stop paying their creditors altogether. And if you stop making payments to your credit card company, what do you think's going to happen? It's only going to make things worse. And so that's really bad advice while they're buying time on the chance that they might be successful negotiating. Well, what if they're not? If they're not successful negotiating, the worst case scenario then begins to take shape. And as you've fallen farther and farther behind on your account while they're trying to negotiate, if they leave you high and dry and say we weren't successful, your creditor could come back and sue you for the amount of money that you owe. So it's a very risky proposition. Certainly, I would recommend that people consider any other alternative before thinking about settlement. And if you're going to try to settle your debts, probably better off to try to negotiate yourself than to pay one of these third-party debt settlement companies.
And a common complaint from the victims, and I'm using the word victims that I've spoken to, is they paid the money, maybe hundreds, maybe thousands of dollars up front, get absolutely no help whatsoever from these companies, and then they're either the company disappears because they're fly-by-night or tells them, well, we never really guaranteed anything. We only said we try. So not only have you have your credit ruined, but you're out hundreds or thousands of dollars on top of things.
Some of the promises that some of these companies are floating and some of the tactics they're using are just not acceptable. And if you want proof of that, you can just look at some of the action that's been taken by federal regulators against these companies that violate the law in promoting some of these services. So it's just really, really risky for consumers to turn to third-party debt settlement companies with the expectation that they're going to completely deliver on what they're offering.
A lot of the companies in these ads have names of law firms, so you assume you're dealing with a lawyer. They must know what they're doing. Is that really the case?
I think the opposite is true in many cases, Herb, because what was discovered in recent years is that some of these debt settlement companies are using terminology that leaves the impression that they are lawyers and that lawyers are directly handling your case, but your case is not at all being serviced by a lawyer. It's probably being serviced by someone who just had a few weeks of training and got put on the phones.
What about bankruptcy, the bankruptcy option? Should people consider that, or is that the last thing you might want to consider after getting some help from a nonprofit credit counselor?
Yeah, well, bankruptcy may seem like a quick fix, and it probably may appear to relieve some financial pressure in the immediate future. It doesn't always solve the problems that lead to financial hardship in the first place. So with restrictions on repeat filing and some of the limitations on the types of debt that are included in bankruptcy, turning to bankruptcy can be just as risky as hiring a debt settlement company because you may end up making your situation worse by falling back into the same problems that led to the decision to file bankruptcy in the first place, but yet without the opportunity to file again during a period where you're limited in doing so.
I think it's pretty clear that we're headed into an economic slowdown, so we want to be prepared, even if you're doing okay right now. We're going to talk to Bruce about that next. This is Consumerpedia, powered by checkbook.org.
Consumerpedia Fast Facts. Bank of America issued the first general-purpose credit card with a revolving credit feature in 1958. Today, more than 191 million Americans have credit cards. According to Debt.org, the average credit card holder has about 3 cards, and the average household debt is $5,300.
You know, you don't have to be drowning in debt to be impacted by the economic slowdown that's coming down the road. Whether we hit a recession or not, things are certainly going to get a little tougher economically. Bruce, how do you do that? Because we don't want to wait till you're in debt to have to see a counselor. We want you to be able to do some things on your own now.
Yeah, trim your budget. Take a look at your budget and see what you can get from it. This is a great opportunity. If you haven't been keeping track of your budget, if you haven't been keeping close track of your spending, now is a great time to do it. And you can be proactive now if you're doing okay now, but you expect hard times in the future. And look for ways to save by cutting out some of the discretionary expenses. A lot of people right now, they have redundant streaming services or things that they may have been enjoying, but may not be necessary. So you can trim a little bit here and there by cutting some of those things out, right-sizing your budget, and looking for opportunities to save within your budget, even some of the necessities. Some people I know have even taken up the old practice of couponing. So any way you can do yourself a favor by trimming that budget, that's something you can get started on right now. That's one thing you can do. But that's on the budgeting side, on the monthly expenses. Then you've got your creditors, the credit cards and the loans that you owe. You can also look for ways to save there. And if you have a decent credit score, you can actually shop around in the marketplace right now. Even though we've heard of interest rates going up, you still could be competitive in the marketplace for a rate that might be lower than what you have, especially if your credit score has gone up over the past several years. You may be in a place right now where you are better off than you were when you applied for those credit cards and loans originally. So you could probably shop around and save on interest and fees right now. So there are a number of ways that you could approach this and save not only on the debt repayment side, but also on the budgeting and monthly expenses side.
If you work with a nonprofit credit counselor and they help you draw up a budget, does that budget include setting a little bit aside each month to build that emergency savings fund that you probably don't have?
Well, the golden rule applies in all cases, and that's pay yourself first. And so in working with a credit counselor, you can actually get to a point where you can put money aside for savings where you may not have been in that situation when you reached out for counseling. So the goal of the credit counselor is not just to help you affordably repay your debt. It's also to put you in a position where you don't have to be as dependent on debt in the future. Part of it means building a pretty good financial safety net by growing your savings.
A key point I want to leave our listeners with is that a lot of people are embarrassed about losing control of their finances, and scammers are willing to cash in on that and take your money and not do anything for you or possibly leave you in a worse situation. As Cara pointed out, a nonprofit credit counselor is trained to help you. They're not judgmental, and I just hope folks will take advantage of this. How do they find a nonprofit credit counselor near them, Bruce?
You can do it a couple of different ways. You can go to the NFCC website. That's nfcc.org. Again, that's nfcc.org, or you can call the toll-free number 1-800-388-2227. Doing those things can connect you to an NFCC member agency, and that's where you can work with an NFCC certified credit counselor, a nonprofit credit counselor, to get started on one of these plans and to get the kind of help that Cara talked about.
Can you do this over the phone, or do you need to actually visit them in person?
You can do it over the phone, or in some cases where there's an office near you, you can visit them in person. And NFCC member agencies serve all 50 states and U.S. territories.
And it's not just for credit card debt. You have mortgage counselors, student loan counselors, that sort of thing, right?
Yes, there are a lot of things that NFCC member agencies can do for people who are looking for advice in a number of different areas, whether it's buying your first home, or whether it's preserving home ownership by trying to avoid foreclosure or finding affordable housing. Also helping borrowers navigate the complicated process of affordable student loan repayment, or helping small business owners or prospective small business owners develop a plan that helps them separate personal and business expenses.
Once again, the National Foundation for Credit Counseling, nfcc.org, is the place you want to go. A lot of resources and a lot of help available. Bruce, thank you so much for your time.
Thank you, Herb. It's been a pleasure.
Well, that's it for this episode of Consumerpedia. You can subscribe to us on Apple or Google Podcasts, Spotify, Stitcher, or wherever you listen to your podcasts. That way, you won't miss an episode. Remember, we release new ones every other Thursday. Another way you can support this show is to follow us on Consumerpedia on Facebook and Instagram, and at My Consumerpedia on Twitter. I'm Herb Weisbaum. Thanks for listening.
Consumerpedia is a public service of checkbook.org. We're a unique nonprofit that empowers you, the consumer, to save money and make smarter choices. From auto repair shops to doctors, plumbers to vets, you can count on checkbook.org to help you find the best services and avoid the worst. Local ratings are unbiased and accurate. If you live in or around these 7 cities and haven't joined Checkbook yet, check us out. Boston, Chicago, Philadelphia, Seattle, San Francisco, Minneapolis, St. Paul, and Washington, D.C. To get your free 30-day subscription, go to checkbook.org/Consumerpedia. Consumerpedia, empowering consumers to save money and make smarter choices.